Welcome to another video, a video on telecommunication investment of Safaricom going to Ethiopian market. Safaricom is one of the largest telecommunication companies in Kenya and also in East and Central Africa. It has the largest number of subscribers in Kenya and also in the region, and also it's the most profitable company in Eastern African market. It's also known for its innovative products such as MPESA, a mobile money transfer that has been hailed for fueling financial inclusivity around the globe. Ethiopia seeks to liberalize its telecom sector by inviting bidders to the country to join the state-owned Telco. As we know, Ethiopia is the second largest country in Africa by population. It has more than 115 million people. We also know that Ethiopia is one of the last countries in the world to have retained a state-owned monopoly provider of telecom network and services, a market which is dominated by private sectors in most countries, including Kenya. The country plans to introduce competition in the telecom industry with rigorous process which started in 2019 by the government as part of its economic reform agenda, which aims to open up its vast and explored telecom market, creating millions of jobs and also help in reducing poverty and the growth of the local economy. The country is seeking to double its mobile towers to about 14,000, and this would require an investment of 1.1 billion, and also build out its fiber optic network from less than 30,000 kilometers. It is also planning to sell 40% stake in Theo Telecom, the state-owned telecommunication company, and also issue 2 new telecom licenses. So opening up of the market to private sector competition and foreign investment is expected to bring the prices down. It's also expected to ensure that the products which are offered by these players are of high quality, and consumers will be given more choices. It will also be the foundation for Ethiopia's future digital transformation. So Ethiopia asked for bids, and it has already awarded Safaricom and its consortiums the license to operate in that country. So the license was awarded to Global Partnership for Ethiopia, a consortium that consists of Safaricom, which owns 55.7%. We have Japan's Sumitomo, which owns 27.2%. We have Vodacom, 6.2%, and the CDC Group, which owns 10.9%. Other bidders were the MTN Group, which had bidded $600 million, but they lost. Awarding of the license to this consortium allows them to start operations in offering telecommunication service in Ethiopia. The Safaricom-led consortium received the license in May 2021 after winning the bid, and they are expected to register a local company within 45 days, and they have already done that, and they have registered Safaricom Ethiopia. So Ethiopia Communication Authority granted a nationwide full-scale unified telecommunication service license to Safaricom Telecommunication Ethiopia PLC, which was supposed to start in 9th July 2021, and that license is valid for 15 years from the effective date and supposed to be renewed for additional 15 years, and this will be subject to fulfillment of all license obligation. Only two consortium had made formal bids in the auction for the two operating licenses. The other one, we said, this was CDC Group. Other groups withdrew for various reasons. The winning global partnership for Ethiopia, GPA, bid was $850 million, and this is what they are supposed to pay for the license. You have said this consortium consists of Safaricom, which owns 55%, Japan's Sumitomo, Vodacom, and CDC Group. CDC Group is a British development finance agency that has also backed Liquid Telecom with 180 million in 2018 and 40 million in 2020 in tranches. So what opportunity is this player expecting from what opportunity does it want to exploit in Ethiopia? Safaricom Telecommunication Ethiopia is expected to create digital transformation that will positively impact the economic and social lives of Ethiopians, which is home to 115 million people. The company sees Ethiopia as a critical part of their strategy and a mergers, partnership, and acquisition. They believe that this investment will provide quality and affordable mobile and internet connectivity to enable more Ethiopians to access quality telecommunication services. Attaining the final license paves way for the new player to get underway with starting operations. Although the new telecom will have its own executive and full management teams, Safaricom will send its staff from Kenya to help in implementation and also running operation in Ethiopia at first. It will then inject into local workforce as the business grows. Safaricom Telecommunication Ethiopia PLC is expected to start rolling telephone services from 2022 and put a low Earth orbit satellite in place that will provide national 4G coverage by 2023. The consortium forecast to create up to 1.5 million new jobs, help millions of business, and bring investment of $8.5 billion over the new decade. Earlier in May 2021, Ethiopia Telecom launched a mobile phone-based finance services, Telebill, to boost digital economy by offering cashless transaction as an alternative to inefficient banking system. So this is seen as preparation for the competition that is coming from Safaricom, which offers MPESA services, the mobile banking system, which was started by Safaricom 14 years ago, and it's popular and has been adopted by multiple other countries and has served as a key enabler in increased financial inclusion in Kenya and beyond. So Safaricom aims to tap that market, especially with its innovative products, and sees the huge population of Ethiopia as an opportunity, given that the country of 115 million people, which only have 44.86 million people who are connected, and internet users are only approximately 24 million. It sees a huge market that can exploit, and but it will face stiff competition from Ethio Telecom, which is a state-owned telecommunication company. So one of the challenges that Safaricom Ethiopia, or Safaricom Telecommunication Ethiopia PLC, is expected to face is the stiff competition from the state-owned Ethio Telecom. As we have said earlier, the company has already rolled off its mobile banking services through the Telebill, and this is meant to boost the digital economy, okay, so that by the time Safaricom is getting on the ground, they already have a product that they can compete with, and also to help them to retain that market share. So Safaricom Telecommunication Ethiopia PLC is set to compete with Ethio Telecom to offer services to Ethiopian market, and only 40% of the population is currently connected. Recent development from Ethio Telecom include launching its mobile money services in mid-May. It has also partnered with Ericsson to expand its 4G services into southwest region of Ethiopia in June, and it has reported an increase of 18.4% in its full year revenue. Part of the liberalization plans to bid goodbye to the state monopoly in the country is to privatize 45% of Ethio Telecom. Already, expression of interest has been issued by the government, and soon they are expected to get a partner who will take off 45% of the stake. It is expected that MTN Group, which bid for the first license, will choose to invest in Ethio Telecom instead of waiting to attain an operating license. So the other players like Orange and Etisalat, they also believed to be looking for that option. So Safaricom Telecommunication Ethiopia PLC should expect stiff competition from Ethio Telecom. They have already started rolling out products which are to compete with these companies, and also they also plan to sell a stake to other players, and we have seen other experienced groups such as MTN, Etisalat, Orange are looking into entering the Ethiopian market through buying out the 45% stake that is being offered by the government. The other challenges, apart from the competition, the process of opening the telecom market in Ethiopia has not been smooth, as there has been vested interest where many would have preferred to preserve the status quo. Ethio Telecom has most to gain from the expansion of the digital economy, but it also risks losing market share if it fails to compete effectively. So government has been trying to shelter Ethio Telecom from competition, so there are questions whether government should continue doing that. But this seems to be the motivation behind the policy announcement that seeks to restrict the operation of digital financial services to Ethiopian firms and nationals. But this may slow down innovation and investment in the market, and may actually hinder Ethio Telecom's own ambition to attract a strategic investment partner from abroad. A better strategy probably would have to be to encourage Ethio Telecom to compete on equal terms with the new market entrants in providing mobile money services without ownership restrictions. Similarly, the direction which has been taken by the government in limiting investment by independent cell tower companies, obliging the new entrants to use the already existing infrastructure which is provided by Ethio Telecom, may slow down network rollout, particularly in rural areas. Ethio Telecom will need to collaborate as well as compete with the new entrant, but this is best done by allowing for open commercial negotiations in which the new entrants can make rational decisions whether to build their own infrastructure or buy capacity from the Ethio Telecom. Ultimately, policies that seek to protect Ethio Telecom infrastructure by allowing it to charge high prices for the interconnection will end up harming the company. The new operators will be Ethio Telecom biggest customers if prices are set fairly through market competition. Ethio Telecom has the potential to become a regional powerhouse, but if it's well prepared for the market. Also, there are fears that the monitoring and control of citizen communication might continue. We know that Ethiopia has traditionally used Ethio Telecom to monitor and control citizen communication, a scenario it may try to replicate with the new licensees. It remains to be seen whether the new licensees will be ready to resist any illegitimate actions by the state agencies to impede citizens' access to digital information platform. Another challenge is on U.S. sanctions on Ethiopia, which puts the funding of the new company in doubt. Over half of the winning consortium's financing could be in doubt due to U.S. sanctions. One of the main financial backers to GPE consortium is the United States International Development Finance Corporation DFC agency. DFC made a pledge of up to $500 million loan to the GPE consortium to finance the design, development, and operation of the new private mobile network provider and the acquisition of mobile network provider license. In May 2021, U.S. administration issued economic and security sanctions to try and pressure the Ethiopian government to end the violence in Tigray. As a result of the sanctions, the DFC funding was initially thrown into doubt as U.S. investment in the country were paused. However, the fears were allayed through when Safaricom disclosed that DFC had been granted approval to still make select investment in Ethiopia, including the funding of the GPE consortium. Despite this announcement, DFC has made remarks stating that it could pause or stop its investment following escalation of armed conflict in Ethiopia. DFC spokesperson was quoted saying that the board approval signified initial DFC willingness to consider a loan to the consortium in the event it wins license, but it does not obligate DFC to move forward with the transaction. DFC is working closely with its partners agencies in the United States government to monitor the situation in Tigray and will consider carefully its impact on any potential financing of the Vodacom consortium. So with those challenges, we'll wait and see how this rolls out. So that's a brief overview of Safaricom journey to Ethiopia. We have seen what Safaricom is. We have also heard that Ethiopia is seeking to liberalize its telecom sector, which has largely been owned by the state for many years, and it's the last state, or it's the last country in the world to have retained a state-owned monopoly provider. We have seen that liberalization of telecom sector in many countries have failed economic growth. So we expect that with this awarding of license to Safaricom PLC Ethiopia, the market will be open up, and consumers will have more options, quality of services will increase, jobs will be created, and other benefits will be accrued out of that. There's a huge opportunity, or there's a huge market in Ethiopia given its population and also low penetration of mobile services, including financial, digital, banking, and also internet services. But there are challenges that will face the Safaricom telecommunication in Ethiopia, and also other entrants, including the stiff competition that is expected from the state monopoly, Ethio Telecom. There are also unequal competition due to policies which have been put in place to protect the state-owned telecom. For example, they are not allowed to launch financial services on the first year. In preparation to entrance of new players, Ethio Telecom launched its financial services. So they are supposed to operate for a period of 1 year, and MPESA will only be allowed to come later. So this gives Ethio Telecom an advantage. There's also the issue of monitoring and control of citizen communication by the state. Given that these companies are coming from countries which have strong democratic principles, we'll wait and see how this folds up. And also there is conflict which is ongoing in Ethiopia, and this conflict has led to United States to issue sanctions on Ethiopia, and this has put into jeopardy the funding which was supposed to come from one of the agencies in USDFC, or International Development Finance Corporation, which is supposed to give the consortium a loan of $500 million, which is supposed to go towards financing, design, development, and operation of and also payment of part of the license. So we'll wait and see how this unfolds, how the new company, or how the new companies will perform in the Ethiopian market. So thank you for watching this video. Look out for more videos in the future. Don't forget to subscribe, comment, like, and share. Thank you.